Hey everybody, this is Dave Savage, and I am here with Steve Grossman. Steve, what's up, my friend? Looking forward to
How you
hearing
doing,
what's.
Dave?
Hey, I'm doing great. Looking forward to hearing how you and Patrick are using Mortgage Coach nowadays.
Sounds
So,
good.
if you did not listen to the interview last year with Steve and Patrick, you need to check it out. I mean, it was one of the best interviews of the year. They did a great job of just explaining their team dynamic, who does what and how they work together. So, if you want to go deeper with Steve, check that out. So hey, Steve, we're hearing lots of people say that there's more rate shopping than ever. Big banks have lowered their rates, so it's more challenging to win loans. Inventory's down. Everybody's got a big pre-qual pipe. Let's just focus on how you guys are using Mortgage Coach, and then I would like to just get. I know Patrick goes through the Mortgage Coach report with folks, but I want to hear what you say to the family before they get the Mortgage Coach report.
hmm
But let's just start with a couple. What are the most common strategies that you're using Mortgage Coach for right now?
Sure. Well, I just want to touch upon a couple of your comments, Dave. The first thing is, all markets are competitive, but all markets have their own pain points. I think as far as the supply factor, the supply throughout the country, it's a common problem, but I think in certain markets, they're hotter than others. We have a supply issue, but at the same time, I understand certain markets, there could be 10, 20, 30 bids on a single family home. We don't have that here. When a house is priced right, do we have 3 or 4 or 5 bids? Yes, but it's probably not the same frenzy as in other parts of the country.
What market, by the way, for everybody?
We are in northern New Jersey, pretty much the tri-state area, where we sit about 15 miles west of Manhattan.
Okay, great.
So as far as the Mortgage Coach, we adopted it into our practice. It has to be, Dave, 3, 4 years now. And since then, I think we've done almost 1,400 Mortgage Coach presentations. We've kind of made it a non-negotiable where this is just the way we present the options to the client. We feel it's the best way for us to show the client their different rate program options, also to spell out the fees. Because one of the things that we don't have that a lot of our loan officers do have is that when the loan estimate is sent out through our processing team, we do not get the call on please explain this to me. Because what we try to do, or Patrick does, he's my production partner, he vets all that stuff out in front. So before they actually do an application with us, they know exactly what the costs are in buying a home. And we really try to use the Mortgage Coach, not just from a rate perspective, also from a fee perspective, and trying to educate them on the dollars and cents that leaves their checkbook and buying the property. So that's something that we clearly do. One of the things that you ask as far as strategy. If a person's looking for one product, a 30-year fixed rate, and that's all they're going to take, and it's 20% down, it's the rate, the fees, that's what it is. You got to try to come with your best foot forward and compete in the marketplace you're in. But using the Mortgage Coach, it does two things. It really spells out the fees in a comprehensive way. And a lot of times we're getting to the clients earlier on in the in their purchase cycle. So we could see by doing the alerts that we get daily from Mortgage Coach to show if the people look at it. So we see that they're engaged, and we use that as a tool to follow up with. Where the Mortgage Coach has been also extremely helpful for us. I'll take a step back. With that individual person who's just looking at one product with maybe 20% down, where we constantly change is when we educate them on when the price changes or when the rate changes or the real estate taxes changes. Because in our market, real estate taxes tend to be about 2% of the purchase price, which is pretty excessive. If you have a $500,000 house, it can be $10,000. In certain towns, it could be $8,000. In other towns, it could be $14,000. So taxes vary from house to house. So we definitely use this from getting the people comfortable with the payment. We show them the tax benefits of home ownership through the Mortgage Coach, and we also educate them on the fees. What we also use Mortgage Coach a lot on is multiple product. Whether a consumer wants to take a fixed rate versus ARM, whether a consumer wants to do a monthly MI, an 80-10-10, financed MI, a borrower paid MI. So what we do is we really come to them with all the options that would be available to this particular borrower in their price point, down payment, credit score, DTI, etc. So we're basically showing them all the cards on the table, and we go through that when Patrick does do the presentation on the pros and the cons of why column A is better than column B, and column C may be better if you're only going to be there for a short period of time. So that's something we do. How we've won business is, I would say the thing that comes to mind the most, and FHA is a small percentage of our overall business, but what we've had tremendous success with, and I know a lot of the people in the Mortgage Coach family sell a lot of FHA loans. I wish I did. I don't. Where we've had tremendous success is we would show 3 or 4 options on an FHA loan. We would show the first column would be the lowest rate we could give with the customer paying full fees and closing costs and prepaid expenses. Then maybe the second column, we give them a lender credit of 1% of the loan amount. The third column could be 2. The fourth column could cover all their closing costs. And what it seems is that when we get into the fourth column and the client could come to the table with the least amount of money out of their pocket, for some reason or another, we've had tremendous successes. That's the option most people go with, that they can get into a house truly with 3.5% down. It's easier for us to do the lender credit in our market than it is to do a seller contribution.
Got it. Well, hey, I think hopefully a takeaway for everybody. Every market's different. You can tell that Steve knows his market. He knows the strategies that help him compete with his competition, in his marketplaces. So if you're on this call or if you're listening to this recording, what are the 3 or 4 strategies that are really going to help you increase your business in today's market? Also, make note that they use those alerts that they get. I don't know if you want to speak to how you use those alerts a little bit more. And then I want to make sure we get to what are you saying before you hand it off to Patrick, to the family. But how are you using alerts first?
Sure. I mean, I'll address both of those. The alerts is great. I mean, I think it's amazing. One of the most shocking thing to us, Dave, is how many people look at the Edge presentation after they close. I don't know why, I don't know how, but that's amazing to us, and I don't have an answer. As far as the alerts, we can see that the people are looking into it. It's almost a reminder to us that maybe we should circle back with the people. We shoot them an email. Do you have any questions? But it also sees that the people are engaged, and it's almost like you still have. If you do an analogy of fishing, it's they're nibbling at the bait. And the fish is still down there and still nibbling on the bait. So it's just a way for us to know the client's engaged. It's a way for us to then circle back with them. But that's the way we use that. And I forgot what your other question was that you asked earlier on.
Well, before we do that, I want to comment on that because I'm hearing from a lot of mortgage coaches that right now their pre-qual database is up. So they're using the total cost analysis as a way to update, communicate. And they know when people are engaging, so they can be at the right place at the right time. One last thought on that reminder is we have a lot of mortgage coaches post-closing that update the total cost analysis. And now we're starting to manage that mortgage. We're starting to provide them with a review. Hey, this is how you could pay off your home faster. If you made an extra $100, you could pay off your MI faster. So another suggestion for people on this. So Steve, let's close out with what do you say to a family, knowing that you're going to be emailing them a link with the total cost analysis. Patrick is going to be going over their options with them. What do you say to them so that when they get that, 1, they click on the link, 2, they're excited about it, like they're getting value from it, and you're really positioning them for your production assistant? What's that sound like?
Well, a lot of times it can be one of 2 ways. In many instances, Patrick is taking it from A to Z. In other instances, I would preface by saying, I'll put you on the phone with Patrick. You may take down some information. A lot of times I also say, please expect some mortgage options. We're going to go ahead and send them to you. And then after you receive them, please call us or I'll call you and we review it. All we're doing is team up. We quote rates over the phone, but what we try to do is say, let's go ahead, let's send you some options and let's review them together. So it's a lot easier for us to just not to explain rate because, of course, it comes down to at the end of the day, it is the rate, but we want to also educate them on the total payment. And what we also find is when we're competing with other lenders, by being complete full disclosure on everything, including maybe the total amount of prepaids. In our market, it's not just what you put in the escrow. It could be the next quarter that has to be paid in advance. We won business by, even our numbers look not as desirable because we're showing people they have to come to the table with more money, but it's really the truth. It's the amount they're ultimately going to have no matter what. It's going to be the same with everybody. But we almost vet out the other guy by saying, why didn't they show you that you have to put up an extra couple more months of taxes? They're doing you a disservice. Our job here is to be your financial advisor and manage your mortgage for life. And this shows you as an example is that we're showing you this stuff from the get-go. And if the competition is not showing this to you up front, what's going to happen during the process? What aren't they going to show you? Is there going to be any last-minute surprises? So by doing it, and sometimes your numbers may not look as pretty, but you're actually being honest with the client and you're telling them exactly. You're educating them. So the day of the closing, they're properly prepared. When they have to go into underwriting, they have sufficient assets. So it just became a way of us doing business. But just passing the baton over and having Patrick's doing, I mean, he really handles most of it for me, and he's the one walking it through the people. And what happens, sometimes our gestation period in this market, we could track people for 3 to 6 months before they buy something, and we'll constantly go back to the mortgage coach and update the purchase price, the taxes, the interest rates. One of the things we also use, Dave, is that we're tremendous with our CRM, we're tremendous with our follow-up, but sometimes things slip through the cracks. It happens to all of us. What we'll do is we'll go back to the edge and we'll look back at the last 10, 20, 30, 40 presentations saying, what happened to that guy? Have you heard from that guy? No, let's give him a call. But it's also a way for us as a reminder to really go back to people that might have slipped through the cracks because, maybe our CRM's not perfect, maybe our memories aren't perfect, but it's just one more tool that we have so we could realize these are all the people that we've engaged with and took the time to do a financial presentation for.
Love it. So a couple things, folks. First of all, how simple that was. I'm going to send you your options. Let's go through them together. So often, and I know this because I've interviewed these guys, they use the live experience. So it's not uncommon that they'll be on the phone with the client and they'll be driving them through the Mortgage Coach Live. Listen to our interview with Steve and Patrick if you want to get more clarity on that. Also, I want to make note that this is a common theme among the best of the best. They are using it as an educational tool. You notice educate on fees. So everything is there, everything is complete. And you're really just making everyone else look incompetent or like they're hiding something from you. When you present with Mortgage Coach and it's a great experience, the other loan officers they talk to just aren't going to be as good. So, hey, hopefully this has been a valuable conversation for everyone out there. You are looking at this in our, what do we call them, real-world scripts. Make sure you check out some of the other scripts. Also, in the description below, I'll put a sample to one of the links. When I interviewed Steve and Patrick, I got some sample total cost analysis. We'll put a link to one of those down below so you can see how these guys present. And Steve, hey, I know you're busy. Thank you so much for taking time for the Mortgage Coach community.
Anytime, Dave. Have a good day, man.
Yeah, I really appreciate it.